Holy smokes, everyone. We need to talk about what just happened in the markets today. Today was another wild day in the markets. We're seeing something happening that is very, very pivotal right now. And also, could the market crash scenario that we've all been talking about here on the channel, could this still be in play? And I'll get into why it could be and also why it may not be. So, first things first, let's talk about exactly what happened today. So, we're continuing to see the 10-year US Treasury yield absolutely skyrocket, and what's even more worrying is the speed at which it's going up. It's going up much faster than anyone expected. So that's first thing worrying the markets right now, and especially we're seeing what it's causing is worry in the Nasdaq, the high growth tech stocks, which have really been lifting up this market right now. And I'll also get into later in the video if I'm buying, if I'm selling, what I'm doing, my thoughts. So we're seeing the Nasdaq absolutely get plummeted today, get hit bad. Was down about 2%. The S&P was down around 1.5% ish, and the Dow down around 1% as well. But what we saw really get hit hard today, and what we're seeing right now is we're continuing to see this trade right now because there's so much uncertainty in the markets with what's happening with Russia and Ukraine, with inflation, with the economy, with recession risks. We're continuing to see a trade of risk on to risk off. So, for example, risk on would be high growth tech stocks, cryptocurrencies, okay? And then risk off would be people flooding into things like bonds and gold and silver. So what we saw today was a flight to safety, okay? We saw people go into gold and silver. That was up a bit today, so that's doing well. And if we do enter a official recession like I've been talking about, I think it will continue to do even better. But what we also have to talk about with crypto, Bitcoin, it's fallen below $40,000 for the first time in a while. So that's a very key level, and that's something that's probably going to worry crypto investors. And could this be the first leg down that takes us back down to 30k? We'll get into that later. That's what happened. Stocks down, cryptocurrencies down. Now, what have been some indicators that have come out? Well, we've got the CPI data that's going to be coming out tomorrow, Tuesday morning. Now, we just had the White House come out, and they're saying this is going to be not a little bit of a high read. This is going to be an extraordinary high read. So I think the markets were worried because if this is an extraordinary high read that comes out tomorrow, and the Federal Reserve has a meeting coming up in May, well then maybe that will confirm that they're going to have to do the 50 basis point rate hikes. Just walking in some new construction around here, guys. You can see some houses. It's a bit strange, actually. It's a Tuesday morning. There's no one building. What's going on? It's a bit strange, isn't it? Tuesday morning here in Australia. This will be Monday evening if you're watching from the US. But yeah, that's something the markets are worried about, is this surging inflation. And now with the White House confirming it, then guess what? Because there's political games that get played with the Federal Reserve, they throw the blame game around. So if it keeps getting worse, the Federal Reserve is going to get put under more and more pressure to hike. Now, also what's come out, some articles or some analysts speaking, is they're saying when we're not in a recession, we're in a war session, where pretty much instead of going into recession, unemployment going up, and prices coming down, maybe we could go into a recession and prices keep going up because of war, which is something definitely possible, and that's also what you call stagflation, like what happened in the 70s. So if that happens, that's going to be very bad, and I think things could get much worse if that scenario plays out. But what also could happen, possibly, because we need to get both sides of the story here, maybe these next 2 months CPI numbers coming in, yes, they're going to be very hot, but maybe that could be the peak of inflation rate, meaning prices won't go down, inflation won't go away, but we would see, say for example, if it comes in at 9%, just for example, I'm not saying it will, maybe we won't see a higher CPI read higher than 9%, for example. Now, this is not me predicting that, but I'm saying what could be for the markets, because I've already gone over what could be bad if inflation getting worse, Federal Reserve lifting interest rates higher. If it does start to come down very slowly, then the Federal Reserve may all of a sudden flip and say, oh look, you know what, inflation's coming down, see, we told you it was transitory, don't worry, we're not going to lift interest rates now. Actually what we're going to do, because it's looking like we're heading into recession, we're going to stop lowering interest rates and we're going to start quantitative easing again. And this is why I've deployed about 40% of my cash in the markets right now, because I think that's a possibility. Now, in investing and in the markets and in macroeconomics, there's no guarantees, only probabilities. So I want to hedge my position against both possible scenarios, because I do think the Federal Reserve is going to flip once things start getting really bad. But I also do see that there's still extraordinary risk in the market right now, and I think there is a real possibility that these markets could go lower if interest rates, if the Fed has to lift interest rates above 3%, and if the 10-year US Treasury goes above 3.5 to 4%. If the 10-year goes above 3.5, 4%, I do think we'll see a bear market in stocks, meaning there'll be peak to trough decline of 20%. How long? Nobody knows. But I still do think the sellers will get worse. And for crypto, I do think Bitcoin would fall below 30k. And that's why I've still got 6% of my cash on the sidelines to buy up these opportunities. Because there are always opportunities, everyone. But what you have to do when the opportunities come, you have to strike, okay? I'll also put a link in the description if you're looking at, buying and selling, trading cryptocurrencies. You can use my code MICHAELCOWAN FTX. They're a great platform. Instead of paying crazy high fees, you can actually earn cryptocurrency for every trade over $10. And if you're into trading NFTs, there's no gas fees, which are normally crazy expensive. So yeah, check out that link in the description. So again, people, we're at a pivotal point in time at the moment, okay? We have to see if the Federal Reserve is going to do what they're going to say they're going to do. Also, something that's going to come out, it just comes to my memory now, earnings season. Earnings season is coming out. This is going to be crucial for stocks, because last year, earnings were extraordinary, okay? Because of all the stimulus that went out, all the stimmy checks, companies' earnings went up through the roof, and that's why we saw the markets rally, which is, simple fundamentals. Even if their price to earnings valuations were high, if their earnings could come up to meet that, and the stock prices correct a bit, then stocks would come to fair value levels. But the key now is, with a lot of consumer sentiment falling, with consumers not having as much debt power to go out there and spend, what is going to happen to earnings this quarter? So this will be a great indicator to see if we are in a consumer recession, to see if consumer sentiment and consumer spending is falling. And this could be something that's also spooking the markets as well. If earnings come in weak, remember these stock prices are so crazily overvalued from their recent peak to troughs. If earnings come in weak, well then we're going to see more selling pressure in stocks. And then of course I'll be going in there and buying up the real dip, everyone. That's my plan. That's just my thoughts and opinions. What's happening in the markets today, why it fell, interest rates going up, inflation getting worse, chance of recession, maybe company earnings are going to fall. Just getting my morning exercise in, guys. Thanks for watching. You're all awesome. I'll see you all in the next video.